Hello, welcome everybody. In the new trading week, and we are focused on main currencies, main instruments on financial markets, and that is why I'm speaking with David Jones, Chief Market Strategist from Capital.com. Hello, David.
Hi, hello.
David, let's start with the Aussie dollar. Tomorrow we will have a statement of RBA, we will have a cash rate announcement. The forecast is 0.25%. Do you think there is a probability that there will be some surprise on this market, on this statement? What is your view on that?
I don't think there will. I think we'll see rates staying at 0.25%. I think there is speculation that perhaps as the months go on, we'll see that rate start to rise. But I don't think this week we're going to see a change. I think central banks around the world are still being incredibly cautious when it comes to their own national interest rate. I don't think anybody wants to be seen as the first to raise rates because the economies that are in such a fragile state after the coronavirus pandemic, after all the shutdowns, all of this. So I think central banks are continuing, in the short term at least, to be very, very cautious. So I'm not expecting any changes to the Australian interest rate this week at least, but perhaps when we get nearer to the end of the year, beginning of next year, we will see those rates start to change.
Looking at Australia, on Wednesday we will have GDP data. The forecast is -6%. Well, it's a quite big number, or maybe I could say a very low number looking at the GDP in Australia.
Yes, it is. And again, I think with all these GDP numbers at the moment, so much of it, clearly we had countries in lockdown. Australia was no exception. So I think the GDP numbers at the moment, that the market isn't reading too much into them. I think when we get perhaps into next month's number, we see more importance by the market put on these numbers. But I think because we've only started coming out of lockdown, and of course we have seen in recent weeks localized lockdowns in parts of Australia as the virus has taken hold again in certain areas. So we have a still not very true picture of the Australian economy. So you're right, it is it's a negative number. There'll be no surprises in there, and I don't see that much of a market reaction to that Australian number this week.
If we look at one of the main currencies, Australian Aussie dollar to dollar American, you can see there is there is an option that the Aussie dollar will be stronger. What is your view on this currency pair?
It certainly ended last week very strong. We saw it finish off at the highest in this whole recovery that it's had since March. So the Australian dollar is still very strong. I think there are a couple of reasons for that. We still have a weak US dollar. Clearly, a falling US dollar means we're going to see a lift for other currencies against it. That's helping the Australian dollar. Plus, of course, because the Australian economy, a lot of it is around commodities, mining, that sort of thing. We have seen the price of commodities such as gold and copper, for example, to name two, rise quite strongly over the last few weeks, last few months as well. So I think that the stronger commodities there is definitely helping the Australian dollar versus the US dollar. So I think we could well see a bit more strength for the Australian dollar from here. But the risk is, I think, as with plenty of other markets, is if we see the US dollar stage a recovery into the end of the year. But for now, the Australian dollar is still very strong.
The strength of US dollar is the key element because the new month, beginning of the new month, is also very important for this US dollar, because on Thursday we will have an ISM non-manufacturing PMI. Forecast is 57.5 points of this PMI data. But looking at the Friday, of course, Friday it's the NFP day, non-farm employment change, and the forecast is 518,000 new jobs. Well, you think there is a possibility that we will go beyond this data, or maybe you are looking at them and say, well, it's not that easy as we can see it?
I think recently those non-farm payroll numbers have surprised in terms of expectations, and I think it is so hard at the moment, even harder than usual, to try and put an accurate number on that, because again we have such a mixed view with some people still not going back to work, other people getting back to normal. But I think we're getting to the stage now where this number does start to become more important again. As you say, 1.5 million, around that, new jobs expected to have been created. I don't see a massive difference either way from that. So I think this time around we could see that number come in as expected. And as usual, the markets to watch, US stock markets have continued to power higher into the end of August. The US dollar has been weak, with the Fed last week saying that they're happy for inflation to go perhaps above target. But perhaps on Friday, that could be the catalyst for some strength returning to the US dollar. So for me, the market to watch on Friday when these payrolls come out, I'm not expecting a massive shock either side of that 1.5 million expected number. But let's see how the US dollar reacts. Do we see US dollar buyers finally coming back into the market?
I think this is the main question, because we can wondering can the better data in this, for example, like there will be 2 million new jobs in United States. Can it will make any difference looking at the dollar currency, looking at the financial markets, because we are wondering is the second wave of the coronavirus pandemic will happen, and how will it impact on financial markets? And that is why I'm asking you is, do you think that this data can change anything?
I think in the short term, it will add volatility, but medium term, I think you're right. I think we all need to see what the economy looks like in the last quarter of the year. We've had a really strange 6 months around the world, obviously, with plenty of economies in lockdown. They're still not back to anywhere near what they were before all of this started. So I think at the moment, that's why these numbers coming out, they can be confusing, and markets don't put the same sort of weight on these numbers that they were before all of this started. And I think it will only be at the end of this year, so the end of 2020, that we really know what the world economy looks like. But I do wonder, has the US dollar slid too far? So I think this is really the market to watch over the next couple of weeks. Do we see more buyers come in for that? And other markets, I'm sure, will just continue to be volatile. But I think we need a bit more data, a few months more data, to have a really true view of the state of the US and the larger world economy.
And a final question, what is your view on S&P 500 and Dow Jones? So what's your view on American financial markets?
You can't argue with the momentum at the moment in the US markets. If you look at the S&P 500, it finally moved out to fresh all-time highs in August, but the NASDAQ, the more technology biased index, has been doing that since June. So I think if you're going to try and call a top in the S&P 500, you would have lost quite a bit of money over the last few months doing that. So for me, I still think we're going to see these markets go higher in the short term. We still see whenever these markets sell off, the Dow or the S&P, we see buyers stepping back in because they think they've missed out on the rises. So there seems to be a queue of people jumping in on stock market weakness. I don't see that changing in the short to medium term. So I think we should expect further gains in US stock markets for at least the next few weeks from here.
Thank you very much, David, for this conversation. My guest and yours was David Jones, Chief Market Strategist from Capital.com.
Thanks very much.